Hi, this is Stephen here from Share Navigator, and it's Tuesday, the 7th of April. What I thought I'd do is do a video update today and just, I suppose, highlight the benefits of what's going on in the S&P 500 and teeing up our next trade. And then, I suppose, the thing that we all have to be very, very careful about. So, let's look at the positives first. First thing, this series here of lower lows and lower highs has been broken. So, we've had 3 days now of it actually trading outside of this downtrend range, which is really, really positive. The second positive is we've broken above as well this kind of resistance blue line, which was previous support. So it was support here, it was support there, and then as you can see, we kind of smashed all the way through it. And now we've broken back above that pretty quickly as well. So that's two very positive things just from a technical perspective. And you can see the rebound from RSI. We spoke about this before. It tends to be a very positive indicator when we get that set up there. I suppose the downside, if we're looking at it here now at this moment in time, technically speaking, we're still below that 200-day moving average, which isn't a good thing. So normally when you break down below a 200-day moving average, it migrates back towards it, gives it a test, and then we see where we go. So we need to have that in the back of our minds from a technical perspective as well. And then I suppose the big elephant in the room is this announcement tonight that's coming. We don't know what way that's going to go. And your guess is as good as anyone else's. It could change on a dime. My best guess is that the lows have been put in on the market. Having said that, if, for example, we get US boots on the ground in Iran, how long is this going to drag out? What does that mean for oil prices? And then we could quickly get a retest of this and then go lower. So it's really a big guessing game at this moment in time. And I prefer not to trade when we're guessing. Yes, it's likely, given the reaction in the charts, that we're going to rebound and the low is being put in. But that could change in a heartbeat tonight. So my suggestion is just to wait and see. And then we just adjust our strikes accordingly. So moving back to our strategy, if we're looking at our US 500 strategy, and this will apply, by the way, the strike will be the same for people who trade on interactive brokers. This is just using the tax-free IG model here. So we'd be looking at maybe writing somewhere around the 6100 put at this moment in time for the end of April. And I'm already thinking up then, well, like if I did do this trade, where could I roll it down to? And it's pretty much, if I rolled it down to May, if I got in trouble on this, we'd be rolling it down to around the 5700 strike. So I'm not ready to place this trade yet. I'm going to let this market play itself out for one more day at least, just to see what happens tonight. Where do we go? My best guess is that there's some sort of an extension. I think that's probably the most likely outcome, is that we're negotiating is going to be the theme, and we're going to extend the deadline by another week or something like that. I'd imagine that's what's going to happen. That's my best guess, but that's all it is a guess. And for that very reason, I'm going to stay out of it. But it looks like to me, President Trump is desperate for an off-ramp in this, and I think we're probably going to get that at some stage. Whether it's tonight or the next 2 or 3 weeks is impossible to say. But just in case it goes the other way, we're going to stay out of the trade, let today play itself out, and then see where it goes. But technically speaking, looking stronger. 200-day moving average still an area of concern, and obviously a big event tonight. So we got to keep an eye on oil prices. We know that certain geographies in the world were already starting to ration fuel. We know that there's inflationary impacts coming. It's all negative for the economies, and that's not going to be good for the stock market in the medium or the long term if that continues. So we need a swift end to this. I think we're going to get it. My best guess is we're going to get it, but what is that off-ramp? What does it look like? And in the interim, do we get any escalatory things that we need to look out for? So things for you to watch for that might give you a heads up on the stock market as well is the 10-year US bond yield. If you see that starting to rise, it's at 4.33%. For example, if you look at that and then it's at 4.5, 4.6%, not good for stocks. So I would keep an eye on the US bond yield. So I just thought I'd give you this quick update. So in summary, charts are looking a lot brighter. My best guess is we've put the bottom in. Having said that, it's just a guess. And I would like to see what happens tonight first out of the way, and then we'll reassess tomorrow. at this moment in time, if I was putting a trade on, it would probably be around the 6100 strike and the S&P 500, but I'm not ready to place that trade just yet. Okay, that's Stephen with an update on our next trades. Thanks and bye for now.